Hello, hello, hello. How's it going, everybody? Good morning, good evening, good night, depending where you are in the world. Welcome to a Capital Hungry Trading and Analysis live stream hosted during the New York scalping session. Well, just the New York session overall. Hopefully the audio and visual is good right now, as we're just doing the first scalping stream of the new year, first stream of 2022. Well, I've already uploaded a bunch of other videos. I did like the Monday market update webinar, which had some great trade ideas. We did some of these 60-second breakdowns, which played out very well if you guys saw that. News breakdowns as well. So it's not the first webinar of 2022, but it is the first New York scalping session of 2022. How's everybody doing in the chat? How was everybody's holidays? Hopefully you got to spend some time with your family and friends, or just sit back alone and relax, reset a little bit. But now we're back to the work mode. We're back to the hustle mode. So for those of you who are new, we're just going to go through some of the nitpicky stuff, such as the introduction and the process of this webinar, which we'll do right now. We'll get all that stuff out of the way. So basically, you have all of your resources, capital hungry resources and other resources linked in the description, linked on the YouTube layout, and even shown on your stream reminders page now, okay? There is a process and flow to this webinar. Basically, I love to approach the markets and analyze the markets from both a fundamental and technical standpoint if you don't know me, if you don't know how I view the markets, right? So I go through a systematic approach of when I come to the charts of first looking at the economic events we have on the table and seeing how that correlates with what we're trading, then looking at the market sentiment and current fundamentals in play, then doing our price action and market structure analysis, then laying out potential trade ideas with confirms, bringing all of that analysis and those concepts together. I go through this in order by first doing gold analysis, GBPJPY, GBP/USD, Euro/USD, USD CAD, and US30. So with that being said, please be patient in the chat and let me go through the flow, because this webinar is going to be running for an hour and a half and 2 hours, and we still have an hour until actual New York Open or the CPI data, which is at 8:30 a.m. Eastern, for obviously going to have some market impact during the New York session. So just let me take my time, break everything down step by step, how I view the market, and I will get through all of those pairs. After I do analysis and share trade ideas, and we're patiently waiting to execute on those trade ideas, if we get the confirms, then feel free to send charts. Feel free to ask me to check out another pair if you want. Feel free to ask as many questions as you want. But for like the first 30 to 45 minutes, just let me go through the process and flow. And also make sure you read the description and read the stream reminders on your screen, okay? In terms of capital hungry resources, make sure you follow the Capital Hungry News Twitter, which is in the description and also linked here now, which has posted over 30,000 news headlines over the course of the last year and a half. The Capital Hungry YouTube page you are currently on has hundreds and hundreds of webinars on technicals, fundamentals, trading psychology, and so forth. The Capital Hungry Telegram free analysis channel, where I share news, live stream reminders, trades I've taken, member profits and review, other fundamental and technical information like these 1-minute breakdowns and such I would be doing, and so forth. All right, so make sure you guys check all that stuff out. Okay, so I want to talk about something very interesting that for the start of since last week, has caused a heavy whipsaw in the markets, especially in the US dollar, US equities, and gold, okay? And these are the fundamental points that are in focus, and we had a transition in the fundamentals from last week, okay? And I'm going to show you the market impact and what happened this week that has corrected that move. So basically last week with the FOMC meeting minutes, the Federal Reserve was very hawkish with their meeting minutes report, What that means is that they were more adamant about economic recovery and potential rate hikes to come, and started talking about near-term rate hikes to come as well. Okay? So when that FOMC meeting minutes report was released, you can see this had a direct impact on gold, where this downside move here was the FOMC meeting minutes report after having rejections at previous highs, right? That FOMC meeting minutes report of the Federal Reserve talking and being more aggressive about rate hikes also continued into the following days, as we had sellers in control driving us all the way down to new intraday lows at 1789 key level. But that drive down in price also brought us to a key demand and support zone that's been holding since the start of the year and the end of last year, right? But anyways, this downside move here was primarily induced by the Federal Reserve FOMC meeting minutes report that brought a more hawkish tone and led to a bearish move on gold, and at that time led to a bullish move on the US dollar, which was here, and also led to a bearish move at that time on US equities, which was here. Okay? So the Federal Reserve comes into play. They start to talk about interest rate hikes to come, and they start to talk about these various monetary policy tools that they're going to use that doesn't make investing in assets as favorable. So high interest rates, high prices, combating inflation, those aren't positives for gold or the stock market. That's a positive for regulating the US dollar money supply again. So the initial impact was stock market pushed down, US dollar pushed up, and gold also pushed down and had this bearish run from 1830s all the way down to 1790s, right? My expectation is that this week, the following week after FOMC meeting minutes, we would see Jerome Powell, when he testifies in front of Congress, right, that he would bring the same hawkish tone to the table. That's what everybody would expect. But the Feds don't always do what everybody expects. Sometimes they throw a ton of different curveballs. So you can see that this downside move has now been fully corrected ever since this move and impulsive buyers play from the 1800s. Well, what we had happen was a fundamental catalyst that was the exact opposite of the hawkish FOMC meeting minutes. Instead, Jerome Powell, when he testified in front of Congress, brought a very slow and steady approach. He was actually not as hawkish or as aggressive towards talking about rate hikes. He was still discussing Omicron fear. He was still discussing more and more vaccinations needed in the US. He was still discussing how they're going to be slow and steady with the rate hike and tapering process. So what we had happen when you're talking about the order flow movement in gold, and I'll talk about the higher time frames as well, as on the higher time frames such as the daily and weekly, we've really been in this zone for a period of months now, bouncing from the highs and lows. But anyways, on the intraday time frames, what you had happen is as buyers before FOMC meeting minutes extended into these highs, failed to break these previous highs, you had buyers take profit out of the market and sell orders being collected in this area right before FOMC meeting minutes. FOMC meeting minutes starts to talk about interest rate hikes and how they're going to be aggressive with the rate hikes. Sell orders flood the market. We price in that fundamental catalyst, right? So FOMC meeting minutes gets priced in. We don't break this demand zone, which you can obviously see continued respect to multiple times now. And we start to have an upside move from this demand zone. Then we have Jerome Powell come into the scene this week, which was just yesterday now, right? And when he was testifying in front of Congress, he instead brought a slow and steady approach, right? So then you see that fundamental catalyst and bearish move get corrected. So what we have to understand is that low interest rates, the aggressive stimulus, and the high inflation we've seen over the last 2 years, for the ultra rich, for the one percenters, for the market makers, that's been a positive. The increasing inflation, the low interest rates, and the stimulus and asset purchase program by the feds created this artificial market where majority of asset classes, from commodities like oil, the US stock market, the housing market and real estate, other commodities and so forth, and assets like gold, were extremely bullish over the last 2 years. And at the end of the day, low interest rates, high inflation, decrease in the value of the dollar is a sacrifice during every economic crisis the ultra rich are willing to make, because it makes them even more wealthy, and the people who pay the price are the working class, the middle class, because the buying power of their dollar goes down and inflation in the cost of goods of all their consumables goes up. So you have to think about it. The majority of when inflation increases, it's simply as the definition states, it inflates the price of all goods within that economy, whether it be simple consumer goods from your eggs, milk, and gas, or whether it be asset classes and investments like the stock market or the housing market or commodities and so forth, right? So for the majority of the masses, their consumption is all consumable, right? What they are purchasing in this inflated economy is all consumable. They spend their money, they buy the good, they consume it, and it's gone. So essentially, their cost of living just goes up. They're not increasing any wealth. They're not saving any money. They're spending more money than usual on the exact same goods. Where for the ultra rich, the majority of their consumption is into an asset, is into an investment, whether it be real estate, whether it be business, commodities, gold, crypto, stock market, and low interest rates, inflation, and the Fed's asset purchase program keeps all of that bullish. Now, I don't mean to ramble on, but what I'm trying to communicate to you is the smart money, the investors, they want to keep these interest rates as low as possible for as long as possible so they can keep squeezing out as much as they can on this greed train on the stock market. So when Jerome Powell came to the scene yesterday and brought a more slow and steady approach with the rate hikes and was still talking about economic fears and so forth, smart money investors and the overall market makers translate that as, okay, interest rates are still going to stay low. We're still having the stimulus active by the feds. Asset classes go up in price. So this downside move you saw with the FOMC meeting minutes, then the upside spike like on here when Jerome Powell flipped the sentiment and flipped the script, this quick dip in upside move can be seen on all asset classes. For example, when you come look at US oil, you can see this little aggressive downside move here was when he talked about rate hikes at the FOMC meeting minutes. Then he completely shifted the tone yesterday, and you can see oil went from having a dip to turning back bullish right now. Gold went from having a dip to turning back bullish right now. And you have to understand, gold on the higher time frames is still very bullish in price in the 1800s, high 1700s, where 2 years ago it was doing a rally from the 1400s, right? Oil went from negative $40 a barrel all the way to positive 80. And same thing with the stock market. You see, when FOMC meeting minutes was talking about rate hikes, the stock market took a dip. But this week this week when Powell testified in front of Congress just yesterday, he did the reverse. So you saw the stock market come to these previous lows, buy that dip, and turn more bullish. I just want to show you that pattern, that when the feds give signals that rates are still going to stay relatively low, they're still keeping the economy in an accommodative state. The simple translation is that investors and smart money love this. Low interest rates and stimulus, it means inflation is still going to stay high, and all these asset classes continue to go up in price. And who does it benefit when these asset classes go up in price? Does it benefit the working class people, the middle class people? No, it benefits the rich, right? So the main takeaway point that I'm trying to communicate now is that the new fundamental sentiment that's holding is this fundamental point there, the first one. The Feds step back on their aggressive rate hike tone and take more of a slow and steady approach to the rate hikes to come. Right? So you can see the follow-up of that was that the equity markets loved that. They bought the dip and continued bullish, and the US dollar ends up digging deeper right now. Because when the Feds are giving a slow and steady approach, and we still have interest rates low, we haven't seen any interest rate hikes yet, what does that mean for the dollar in terms of pricing in? That's still a bearish factor for the dollar. So you can see the dollar now on the intraday time frames here. After Jerome Powell started to speak, we're starting to get a break of this resistance zone and starting to get a potential move to the downside, which can easily come to 95 before continuing bullish in the overall trend. If this fundamental sentiment of Jerome Powell taking a slow and steady approach still holds, and also US inflation is high today, which I do expect, the high inflation plus Jerome Powell's sentiment yesterday from from him testifying in front of Congress should have a downside impact on the dollar, as we're technically breaking below this zone, showing a lot of exhaustion from these highs. Have Jerome Powell bringing a slow and steady approach, and also the expectations of high inflation. Now, this would make sense that if the dollar softens and we still have that high inflation, gold should at least go back up bullish to revisit these highs and potentially even break higher, with the continuation of the Jerome Powell sentiment and also potentially still high US inflation, which high inflation is bearish for the US dollar, but it's still bullish for all these asset classes. It's still bullish for oil. It's still bullish for the stock market. It's still bullish for gold, right? Did that lesson make sense for everybody in terms of why gold previously did this bearish move and we took advantage of the second half of that, and why it corrected and the fundamentals behind it, as well as you can see that the same thing on the stock market, you can see the same thing on US oil, but you can see the inverse of the dollar turning more bearish. Okay? So, when we're looking at gold raw analysis here, let's go to the higher time frame. It looks like last week and overall, just over the period of months, you can see we've been in this higher time frame zone. If inflation is still high today, and we still have that short-term US dollar weakness, I expect us to at least go and match these weekly highs, but after having more buy orders collected from those lows, potentially start to break to the upside and start to revisit this previous weekly price point level, as you have a lot more buyer order flow in the market, right? On the daily time frame, we can also see that this bullish market structure still being respected. We had very strong dip created here with buy orders collected. That downside move was corrected with the last bullish engulfing candle here, impacted by the Federal Reserve sentiment of Jerome Powell's testimony, bringing a more slow and steady approach. This daily candle has already created a bit of a lower wick, grabbing some liquidity overnight through Asian session. My expectation is if we still hold the intraday for example, hourly time frame, 4 hour, 30 minute, if we still hold the bullish structure and US inflation is still high, we should continue the sentiment and have this daily candle start to flip bullish, going up into the 1830s, right? What we can also see now on the intraday time frames is some very nice intraday bullish market structure, where from that 1789 low point, we had a consolidation zone, which I assume to be buy orders being collected in the market here, right? Buy orders being collected, the downside move of FOMC meeting minutes being priced in, can't break that same demand zone, and then you have a break to above the consolidation zone to print a high. Every time we've had these intraday highs printed, it's very normal the way gold behaves and the way it trends that you get these aggressive pullbacks. You can see that same thing here. You can see that same thing here. You can see that same thing here. But all of these pullbacks are very short-lived and just some lower time frame bearish price action to create a pullback to go collect buy orders from a more favorable demanded price point, right? So when we're looking at gold here, gold could easily come down to 1812 for better buys, like you saw here at these lows at the retest of 1803, or we could easily take buys at the break of the corrective structure or the break of the highs, which would be buys above 1820, buys above 1822. Okay? So pretty much, looking at the current fundamentals and technicals, the confirms we have for gold buys are 1, respecting that daily demand zone and still bullish on the higher time frames. 2, the FOMC meeting minutes being priced in. And you have to understand, the FOMC meeting minutes from the previous week, that was a pretty large bearish run. You went from 1830s all the way down to like 1780s at the real low printed, right? But anyways, that move gets priced in. We also have a mixed labor market report. So you have the FOMC meeting minutes get priced in, the low being printed. This was the NFP whipsaw decision where unemployment rate was good, but non-farm payroll was bad. And instead you have that move priced in and buy orders start to enter the market here. You start to enter some stronger bullish trending market with buyers printing intraday highs and only having pullback phases. Then yesterday, you have Jerome Powell completely reverse what they said at FOMC meeting minutes. This leading to a correction of that downside move. Now, with the higher time frame bullish structure, the intraday bullish structure, just having this current pullback structure from these highs, the US dollar being bearish, and the expectations of still seeing higher US inflation, right? Because at the end of the day, until the Federal Reserve actually starts to increase interest rates or they actually start to taper stimulus support, inflation is still high. There hasn't been any action actually taken from the feds or the government to slow down inflation or to combat inflation. Inflation's still been high, and inflation being high is a bullish fundamental factor for the majority of these asset classes. You know what I mean? Even Bitcoin, even crypto took a dip during the FOMC meeting minutes and then bought the dip up again and did the same exact type of move here. You know what I mean? What you can see here, all these various asset classes against the dollar. This was more of the FOMC meeting minutes. You can see the dip consolidation zone. It's already starting to do the same thing. It's probably going to break out here and then continue back up if inflation is still high, dollar is bearish, and so forth. 90% of asset classes over the last 2 years have been following central bank monetary policy movement, have been doing majority the inverse of dollar movement. Right? So now it's only 7:40 a.m. Eastern, but at 8:30 a.m. Eastern, we have the CPI data, US inflation data. Now, for the CPI yearly, economist expectations is actually still seeing an increase. And the yearly CPI is very important. That's showing you the broad perspective of inflation. So for both core CPI and regular CPI yearly, there's an expectation of an increase. For the monthly, forecasters and economists are actually expecting the monthly inflation to be cut in half. I personally don't think the monthly inflation is going to be cut in half. I still think this figure can come up as a 0.6%, 0.7%. And the yearly CPI can still be relatively high above these prior figures or right on, right? If my prediction is correct and this inflation is still high, US dollar should turn bearish. Maybe we'll get a liquidity grab because CPI and all these US economic data reports are very well known for doing liquidity grabs to collect buy orders from better price points before continuing up, or seeing the increase above 1820 buys. The safer buys, if you want to wait above the previous highs, 1822. Okay? But if all of those confirmed still get respected, we either get a pullback to 1812, fail to break, and inflation is still high, dollar is still bearish, we still respect this structure, just like we've done here, just like we've done here, still going to buyers continuously printing intraday highs. If we break above 1820 and break above 1822, right, then you're going to see an increase to the upside. All right. Why does Forex Factory say higher CPI is good for the currency? Because Forex Factory is taking a definition from before the pandemic era, right? Generally, increases in inflation can be healthy for the economy, right? So let's just say before the pandemic, you don't have any economic crisis, you don't have any lockdown and so forth, right? When you have healthy increases in inflation, and inflation is just generally trending like it has been over the last 50 years, this can be good for the overall economic activity, because if people are still working and labor market is healthy, if wages are healthy and inflation is going up slightly, right? This just means that the cost of goods is going up, but at a healthy rate that consumers can still afford, and economic activity stays very good, right? This is not the case during the pandemic era. Inflation was not increased due to a healthy reason or normal market conditions. Inflation was exponentially increased because the central banks turned on the money printer and increased the US money supply. So this inflation we've seen over the last 2 years is not organic, it's not natural, it's not healthy, it's artificial. Do you understand what I'm saying? This artificial inflation has not been good for the US dollar because the US dollar has been oversupplied. Let me show you guys this again because we still have time and it doesn't hurt, right? They can, whatever governments, whatever the central bank says, in terms of what caused inflation is all a lie. They just say that at face value to the public because they don't want the public to know that with a high inflation, they get even richer. Right? The reason why, this is a 20-year chart of the US money supply, not the US dollar value, but the amount of dollar supply in circulation within the global economy, right? You can see for the last 20 years, money supply stayed in these ranges. Let's see if we can even max this out further back. Yeah, we can go all the way from 1959, even better, right? From 1960 all the way until 2019, we stayed around $40 trillion, in circulation with this consistent increase in US money supply, right? You saw a little bit of an edge up during the 2008 financial crash and so forth. But for 60 years, this is the range we're slowly increasing in money supply. So pretty much before the pandemic, we were at 4,000 billion in circulation of US dollars. With the pandemic that led to lockdowns and the economy becoming stagnant, the Federal Reserve turned on their money printer and you went from 4,000 billion all the way to 20,000 billion into the hundreds of trillions of dollars of circulation of money supply. double-digit trillions of dollars in money supply, right? Over 50% of all US dollars in history were printed, more than that when you're looking at this chart now, in 2019, 2020 alone. This is the simple reason why inflation is so high, the dollar was so devalued, why stock markets were so bullish, the housing market was so bullish, and so forth. But if the government and central bank came to the public and said, hey, we just exponentially increased the money supply. We just printed so much money that it's never been seen before in history over the last 60 years. We just printed 70% of all US dollars in history over the last year. The reason why we're doing this, yeah, we're gonna throw you a little $1 trillion stimulus plan for your little wages, but the main reason is so we can go through the asset purchase program and pump up the stock market. We can pump up oil. We can pump up all these other asset classes like properties. And the rich get even richer through this inflation increase, right? And look at this. The same time you see a direct increase, let's go to the exact dates, right? March 2020 is exactly when the feds turn on the money printer. You have this huge increase in money supply and then continue printing money. Over the course of the next 2 years, it's 2022 right now, right? Does that make sense? Keep that in mind. March 2020 is when the government worked in hand with the central bank, turned on this magical money printer because this money has no value. It's printed out of thin air, right? You can see that. And look at the date, March 2020. Now let's come here and look at US CPI figures. Look at US CPI. Over 2 years. Let's look at first the 20-year. Yes, CPI already trends bullish. Inflation has been going up historically, but started to exponentially go up during the 2020 phase, right? But really look at the data and information here. When does CPI really start to take off and trend bullish? When does inflation really start to elevate? The same time the money printer goes on and the US money supply goes up. Same date, March 2020, going into the summer months. It's directly correlated. It's like 1 + 1 = 2. It's economic math. It's input equals output. There's no fucking, pardon my language, there's no global supply chain issues. There's no labor market shortage. Majority of these major countries are not in lockdown. Inflation isn't going up because of COVID. How could a biological pandemic make the cost of goods go up? None of that is true. That's just what they tell the public, right? The reason why inflation is so high is because of the low interest rates, the increase in money supply, the asset purchase program, right? And you can also look at something else the exact same. Remember, March 2020, this is when the US money supply is increased, right? March 2020. If you're increasing the supply of a good and decreasing the demand of a good, whether it's a currency, commodity, business, stock, or whatever it may be, when there's less demand and higher supply, what happens to the value of that good or service or currency? So let's look at the dollar index chart here. May, we'll zoom it out a bit more. March 2020 is when the dollar started to go from 102 in value all the way down to 90 in value. Why did this happen? It's because of simple economics. High supply, low demand equals lower price. Right? So it has nothing to do with supply chain issues. It has nothing to do with COVID itself, the actual virus itself. The COVID itself, the virus itself, is simply a fundamental catalyst to cause a market crash and continue this same economic cycle of market crash and recovery, because this economic cycle repeating through history, like we saw in 1986, like we saw in the year 2000, like we saw in the year 2008, like we saw in 2020. This repeating cycle makes the rich even richer because, listen to this. When inflation goes through the roof, first of all, number one step, the feds turn on the money printer. Let's go through this step by step. Number one, feds go, oh my God. Oh, the government goes, holy shit, a surprise economic crisis. It's COVID, even though they know full well what's going on. The markets crash, economies become stagnant, the middle class gets stomped on again, they lose their jobs, they get even weaker. But every market crash, like the crash on oil, the dip on gold, the crash on the stock market, sets up fire sale prices for the rich. That's number one. So the economic catalyst comes in, it crashes the market. All these different asset classes like oil and stock market go from a high point and crash down to a low, right? So it creates a fire sale price. Then after the economic crash happens, then conveniently the Federal Reserve and the government comes in and say, oh my God, we need to support the economy after the crash has happened. Even though they've seen many crashes happen before, even though they have the data to anticipate this, even though they know exactly what's going on, everything is step by step and surgical. So after the crash happens, the Federal Reserve comes in and say, oh my God, people are going to lose their jobs. The economy is crashing. The stock market is crashing. They hit the short circuit breaker on the stock market and don't allow any more short selling on the stock market from that dip price it creates. Then the Fed turns on their magic money printer. And like I just showed you on the money supply chart, they increase the supply of US dollars. When they increase the supply of US dollars, right? What this does is that they're going to take this US dollars and they're going to pump the markets through their asset purchase program. Because now you have something very convenient. You have low interest rates and low prices. Oil went to negative $40 a barrel. US 30 went from 30,000 all the way down to 17,000. Gold did the dip before this rally and was at the 1400s, 1500s. The housing market wasn't as bullish as it is now, right? So anyways, US money supply goes up. The feds, for their second step, are going to take this money supply and buy up the dips on these various asset classes, and they start to pump the markets. Investors in smart money also buy up this dip because they've seen this repeat in history over and over again, and they ride the wave that the Federal Reserve and government is creating. Low prices, low interest rates, inflation, and money pumping, right? So this economic crisis only benefits the rich and makes them richer. But what happens to the middle class, the working class, and all of us? Well, the increase in money supply, one, decreases the value of the dollar in your pocket. So your buying power of every dollar you hold in your pocket, without you even knowing, 99% of people didn't even notice this over the last year, but it happened, your dollar was worth less for an entirety of a year and a half. And it's just been starting to rebound over the last 6 months now. But when the money supply was increased, when inflation was going up, the dollar value was less because there's no demand for people to invest in the dollar when the supply is so high. All the demand is in the stock markets. All the demand is in the asset classes from their low points, right? So you have low demand in the dollar, high supply, dollar plummets in value. In the real world, this means every consumer and citizen's dollar in their pocket is worth less buying power. Right? But then that's not all. There's a double whammy that fucks over the middle class. They have a weaker dollar and higher inflation. Remember, inflation inflates the price of all goods, services, and business within the economy. So the inflation benefits the rich. Their stock market turns more bullish. Their house prices go up even more. Oil turns more bullish. Corporates loving it. Their stocks are up and bullish. These oil giants and commodity companies are loving it. Natural gas is up. Lumber is up. Copper is up. Oil's up. Right? Real estate investors, real estate developers, they're loving it. House prices are through the roof. Interest rates are low. But the middle class gets fucked because their general cost of goods, their consumables, the things that they pay that instantly disappears after, and it's just for their cost of living, like their rent, their oil price, sorry, not their oil price, their gas price, because they're the ones consuming the oil refined into gas, their general basket of goods from their grocery prices and so forth, that goes up in value. So that goes up and costs even more than it did 2 years ago, and the buying power of the dollar goes down. The collective hundreds of millions of citizens in the US pay the price for the rich to get richer. Does that make sense to everybody? And in the media and public, the government goes, oh, don't worry, here's some stimulus checks for a few months. Oh, don't worry, here's a little bit of stimulus support. When that stimulus is probably maybe a small percentage of the overall printed money, where the majority of the money printed is going back into these asset classes, back into the markets, right? Does that make sense for everybody? Quick little economic breakdown as we're waiting for New York Open. This is the real world impact of this, right? Now, where can you see this confirmed? Well, US 30 conveniently crashed, and then look at the date on US 30 when it starts to go bullish. March fucking 2020. The same day the feds turn on the money printer. The same day the dollar starts to go bearish. March 2020, right? Look at US oil here, a major global commodity and resource. When did oil crash, and when did oil start to go back bullish again on this rally? Frickin' March 2020. It's the same dates, right? Oil went from negative $40 a barrel March, June 2020 to bullish again, right? This increase in price on oil, this increase in price on the stock market, in the dates, the drop in dollar just conveniently happens to line up the same time the feds increase the US money supply. Fuck, didn't mean to open that. Right? So the day the feds turned on the magic printer, which was March 2020, the golden month, the day the feds turned on the magic money printer and started printing out more money out of thin air, is the exact same day oil started to recover and do a bullish rally and not see a dip since. Is the same time the housing prices started to go up. Is the same time all these other commodities started to go up. Is the same time US 30 went up, right? And it's not just stuff like this. Look at something like lumber futures. Let's look at lumber cash. Right? You can see very large rally in lumber over the last period of a year. Majority of asset classes and commodities followed the exact same trend. And the reason for that was low prices, fire sale prices, low interest rates, Federal Reserve talking too much. Federal Reserve asset purchase program, and inflation, right? That fateful day when the feds turned on the money printer and exponentially increased the money supply is the same day inflation just mysteriously started to go up. Is the same day the US dollar started to devalue. Is the same day stock market turned bullish. The same day oil went bullish and all these asset classes went bullish. Hopefully you guys enjoyed that little economic lesson. Now you do understand the world is run by Satans. I just think the world is run by very evil and corrupt forces who have their best interests in mind and are fully willing to sacrifice the lives of others to extend their best interests. I don't really think it's like Satans or Satanists or lizard people, or it's just people who are more evil-hearted and evil-minded that want to benefit themselves. You know what I mean? If you guys don't understand what I'm talking about, make sure you rewatch this. That was a better lesson than you're going to get in an economic course. All right? Now, so anyways, the main thing I'm talking about was we already gave our gold analysis. Gold did its little bit of a pullback here. If we get the hourly candles going above 1820, I would start to take some buy scalps 20 to 30 pips up. Then we have to watch reactions at these previous highs. But I am looking for 1812 buys or 1820 buys. Okay? Now let's do our analysis and trade ideas on the other pairs. GJ. GJ, I'm in a higher time frame bullish bias. You can see we have been trending bullish. We have been respecting this demand zone for a period of months. And what's also very interesting is every time we have a pullback to this demand zone and more buy orders collected from this area at around 150 flat, we'll mark it out with a green box to show it's a buyer's demand zone. Every time we come here and we have buy orders collected, buyers start to rally up and go to print new higher highs. Okay? So, we have the combination of, again, the same thing actually took place on GJ. GJ, during the pandemic crash, came down to historical low points. Buy low, sell high. This was 2008 financial crash. This was Brexit crash on GBP. This was the pandemic. All of these crashes and economic crisis, regardless if it was the 2008 financial crash, regardless if it was Brexit, regardless if it was the pandemic, all of these crashes conveniently come to the same historical price point before getting bought up and continuing back bullish on the higher time frames to give massive amounts of gains from these lows. Isn't that very interesting? You have these mysterious economic crashes that people don't know about, that the governments are so shocked by, but in terms of market prices, it comes to very convenient surgical prices. Does it not? Right? It doesn't matter if it was a financial crash in 2008, which had the Japanese yen blow up in value. It doesn't matter if the UK was trying to leave the European Union 2015 during Brexit. The pandemic crash was actually the weakest. It doesn't matter if it's a global pandemic. Conveniently, all of these downside moves come to this exact same historical price point. Okay? From this area, we see institutions buy up these dips. And from these areas, you get very large rallies of thousands of pips. $30 move here from 120 up to 160. Here from 120 up to 180. 120 to 160. 120 to the 160s, we're almost at again. Huge rallies from this area, right? That's number one on the higher time frames. Number two is this more refined higher time frame demand zone. Very strong bullish price action. I see us starting to break these highs and continue bullish. Okay? Number three confirm is the intraday price action and market structure. Very nice and bullish. Buyers continuously printing higher highs, only having minor pullback phases that go to collect more buy orders and continue back up to the upside. Okay? Number three confirm. Fundamentally, Japanese yen by itself is still bearish, and Japanese yen has been trending bearish. Number 4 confirmed fundamentally, UK equity markets are very bullish, showing us investor confidence within the UK economy and UK stock markets very nice and bullish. So I'm on a bullish bias on GJ, and a lot of the capital hungry OGs over the last year will understand why, okay? In terms of scalp ideas in day trades, what I'm looking for is if we can get a retest to 157.2 buys, or now the breaks above 157.5. Even if we were to get a deeper retest to 157, I'd still be in a bullish bias. We have the higher time frames respecting that historical buyer zone of the 120s. We have a very strong higher time frame bullish rally from that area. We have the intraday time frame showing bullish price action from that 149 demand zone. The Japanese yen individually, the second half of this pair is bearish. We also have very nice bullish price action after this double bottom at 156.2, with some strong bullish price action we've seen from this demand zone, with buyers continuously printing intraday highs, and on the lower time frame really just respecting these higher lows as areas of collecting more buy orders. Anytime you have these minor little pullbacks, you just go to collect more buy orders and break to the upside. So I can still see us having target points of going to 157.8. Okay? So that's the analysis I'm looking for, is if we get that pullback to 0.200 or the breaks above 0.500, playing the GJ buyer bias. Gold, this new hourly candle is just opening up. Just for New York Open, we're probably not going to see a significant move till CPI, where I'm still expecting inflation to be high, either getting a liquidity grab, bounce continue up, or the breaks above 1820 and 1822 buys. I would only be in a bearish bias on gold if the CPI data is very good, meaning inflation shows us that it's very low, right? If inflation is decreasing and low, I could take sells if we were to break below this bullish market structure that's been respected for the time being so far. But so far, we've been respecting this nice intraday structure. Okay, so that's gold and GJ analysis. GBP USD. So with GBP USD, we can see on the higher time frames that this pullback structure from the lows is going a bit deeper and can potentially even come to drive up to 1.38 before seeing a potential drop again. This deeper pullback from these lows printed makes sense as we're setting up the order flow for a new fiscal year. And at the same time, we're having the dollar in a consolidation zone and generally weaker, and also showing more bearish price action here on the dollar index movement individually. Is the same time we can see GBP USD in a pullback from lows and Euro USD in a consolidation zone from the lows, doing pretty much the inverse movement of the dollar index. So with that being said, if inflation is still high, the sentiment from Jerome Powell yesterday is still holding, I'm still expecting this pullback structure and bullish structure to continue up all the way to 1.37s and 1.38s, okay? When you're looking at market structure, you have to look at price points of interest. You've had this overall trending bearish market structure, right? That had sellers drive us down into new lower lows, which is here. But the last point of interest on the higher time frame, maintaining the bearish market structure integrity on the higher time frame, is 1.38. From here, you had a low printed by sellers below the previous low, profit taking in a pullback, right? After that pullback to 3.8 flat, more sell orders collected in this area, creating a very strong supply zone of sell orders in the market from an institutional perspective, driving down to these lower lows. We could have GU continue its bullish pullback all the way up to 3.8 and still be respecting higher time frame bears. For example, when you're looking at this market structure here, when you had sellers print these lows, it came from this supply zone here, which was just around 3.9, right? From this supply zone, you had more sell orders enter the market that drove down into these lower lows. You can see at the start of October last year, which is the start of a new quarter, it's quarter 4, right? And coming towards the end of the year, you had a deeper pullback from these lows, the same time the dollar was also bearish. This pullback came back above previous lows, almost up to the same previous supply zone again. Still failed to break, still maintained the overall integrity of bearish market structure. Does that make sense for everybody? So in the short term, if Jerome Powell and the Feds keep that slow, if USD was being weak, why was GU going down? It should go up, right? GU since the start of the year has been going up. The dollar's only been weak for like this last month. Overall, look at the dollar movement and trend. It's been bullish. And you're looking at higher highs printed, right? Having pullback phases and continuations to the upside. What do you see on GU zoomed out here? The exact inverse. It's not rocket science. You know what I mean? But anyways, what I'm trying to explain to you is the same time dollar can come down and be short-term weaker and come down to retest better buy zones at potentially 95, even 94.5 before continuing bullish. If inflation's still high, dollar bearish price action continues as it's starting the new year and we're just getting exhaustion from these highs, very similar to this situation, and this here now, right? If we continue that sentiment, the expectations is that GU will continue this bullish pullback structure from lows, trending in this fashion up till 3.8 before continuing down again, right? So what I'm trying to tell you guys is in the short term now, in terms of scalp and day trades, I'm in a bullish bias on GU because of those reasons stated. One, fundamentally, FOMC meeting minutes getting faded out, and Jerome Powell switching the sentiment yesterday. Two, this leading to dollar weakness, where the US dollar as the world reserve currency is the secondary of this quote, right? Three, still respecting this bullish pullback structure. Four, I see us going up into the 1.38s. I see potential buys from 1.363, 36, and above 365 at these green boxes still. Okay. For a lot of you who are asking specific questions about fundamentals or about specific reports or what I think the dollar's going to do 3 months from now or what I think gold's going to do a year from now, I'm not trying to be rude and ignore your questions. This is primarily a scalping and day trading session where, yes, I gave that whole economic breakdown and lesson, but we're primarily trying to focus on current events right now, playing the New York session volume, and trade ideas across these pairs listed in the description. But that doesn't mean your questions cannot be answered. For example, for people who are asking about the potential pathway of gold or the dollar in the future, go watch. I gotta find it. There's so many webinars, man. Where the frick is it? No, it's gonna. I passed it. Anyways, there's a webinar. Can I search here? This one. pandemic and central bank timeline analysis from 5 months ago, it's all the same thing. It's still the same thing continuing, right? But anyways, if you go to the playlist here, these ones are just some random ones I fucked up with made. But these playlists here will teach you more than any mentor, any paid service in the social media space right now. Educational trading webinars, individual market analysis, self-development videos, 1-minute breakdowns, live market update webinars, live trading streams, and so forth. Okay? You have way too many webinars on my YouTube page to be asking all these questions. It just reflects on your laziness and lack of effort, to be perfectly blunt. You have 3 years of webinars here, 2 years. You know what I mean? On all these various concepts that I'm discussing. If you want more than that, you can come join the Capital Hungry private channel, where I'm not going to advertise the private channel. There's enough members right now who will tell you in the YouTube chat about the advantages of the private channel. All right? Where the private channel, you will learn everything I know, plus way too much consistent daily content, weekly content, and so forth. All right? So I'm not trying to be rude, not trying to like skip every single question, but I can't answer all the questions and also cover what we're doing here. What did the YouTube community do to deserve so many free webinars? Number one, it's advertising for the Capital Hungry private service. Let's just be blunt and realistic. I'm not going to say I do everything out of the goodness of my heart and I want to help people. No. Yes, there's a byproduct of helping people, but it's also, number one, is developing my trading skill set, my accountability, and my journey and experience, right? So those years of webinars is my trial and error process, my knowledge development, my hours of chart hours and work put in. Number two, it's advertising for Capital Hungry private service. Number three, it's useful for all of you. Because the reason why my YouTube doesn't get too many views is because it's purely value and information based. You're not going to see me advertising Lamborghinis. You're not going to see clickbait titles. You're not going to see generic content. It's actual fundamental and technical economic information of the real world markets. You know what I mean? But yeah. I make good money from trading myself and also from the Capital Hungry private channel that I've developed over 2 years. Actually, almost 3-year anniversary for CH, guys. Let's give a little quick round of applause. Started in 2019, it's 2022 now. You know what I mean? 3 years almost been running the business now of people paying for the service, enjoying the content, continuing to grow. But anyways, yeah, I do take the trades myself that I give within the channel. You can see within the private within the free Telegram analysis, I sent out my last month's worth of trades where I made $73,000 excluding commission, which is around 70,000, showing the wins and losses and so forth. You can see all that stuff shared here, all the losses, the wins, the live account proof and all that, right? And you know what the beauty is? Because I've been documenting my process this entire time, yeah, okay, you can come here and be like, oh shit, that's crazy. This guy made $20,000 in a day, or this guy made $70,000 in a month. But you can come here and see the first post, which I'm going to repost myself too now. Right? And you can come here during 2019 days when I was trading penny lots. You know what I mean? Because you have to understand, I started trading in 2017. My first 2 years from 2017 to 2019 area was pure failure. Then in 2019, I started to get far more consistent, developing my skill set and craft, going through the trial and error process, and finding consistency, making $1,000 in a week, hundreds of dollars a day, and doing penny lots, right? And you can see that And I was still doing the same thing, looking at fundamentals, looking at economic events, sharing my full process. Here's like, wow, 2019 when gold was at 1,300. Made $400 that day. These are great memories. When gold was at 1280. Now when I'm talking in hindsight, all I had to do to be rich was just buy gold back then and hold for 2 years. Just keep buying gold. All I had to do was the Iron Man strategy. It worked back then. You know what I mean? 1280s gold was at back then. But yeah, anyways, you can come through this free Telegram channel and check my process from penny lots to where I am today. You can look at webinars, charts, analysis shared, information about the private channel. Oh, okay, CPI coming out in 10 minutes. Clean up some of these alerts. Yeah, the private channel has tons of resources. Like majority of these key levels in the private channel, we usually get price alerts sent to the chat. We have an economic event alert monitor. 10 minutes before every main news, you'll get a reminder so you're not worried about what's going on. Market monitors about price changes, session alert and psychological reminders. Tons and tons and tons and tons of stuff. What the fuck is this guy sending me? Bro, leave me alone. All right, now, before we do our analysis on the other pairs, one of the main reasons why I charge $110 a month, for example, Capital Hungry used to be when I first started $40 a month. But then I started to introduce a lot of tools and services that I pay a lot for. Like for example, this Reuters Icon terminal, as a Capital Hungry business, I have a contract and business partnership with Reuters Icon to have access to this terminal and relay the information. But that costs more than $20,000 a year, right? But with that, that's where the Capital Hungry newsroom comes in. Then you have these things like the economic event alerts, which is tied to the economic monitor and so forth, giving the quick 10-minute heads up about the headlines to come. You know what I mean? So number one, the reason why it costs $110 a month, first, because of the amount of work I do. We do 5 market update webinars a week, 5 New York scalping sessions a week. Like for example, look at this week to start, right? Let me scroll you guys up to the start of this week in the private channel here, right? To start off the week, every single week, we do psychology and mental reminders. I do a psychology webinar or send a educational webinar on psychology that's made in-house. Then I said, this is all on Sunday. Then I send a weekend news briefing report, right? About key headlines from over the weekend. Then I do a weekly recap and refresher webinar. Then we send out the reports of economic events we have throughout the week, political events we have throughout the week, holidays throughout the week. Then I do the focus of what fundamental points are in focus, right? Then we do market sentiment and investor behavior analysis. After that, then we do intraday trade ideas webinar, right? Where I give trade ideas on gold, GJ, GU, Euro USD, UCAD, and US 30. After that, I'll be doing some social media content. Then every morning we do our New York scalping and Zoom sessions, right? Then I do chart work that I also send throughout the days. So you can see we do 5 market update and trade idea webinars a week, 5 New York scalping sessions a week, chart updates throughout the day, on top of having access to all these tools. Like GJ just hit our potential buy zone, a price alert gets sent to the chat. Gold is hitting that potential 1820, price alerts get sent to that chat. We have CPI. We have CPI data coming out in 10 minutes. We get an alert for that 10 minutes ahead. We have a session open. We get an alert for that. That the session's opening, a session is closing, for example, some psychology reminders. We have price updates every 2 hours on top of members, on top of the community and everything else. Now, this is going to sound like an infomercial, but that's not all, right? Before you even dive into any of that content, you have to go through the Capital Hungry Educational Webinar Vault, which these webinars are not on YouTube or not on anywhere else on the internet. This is the holy grail of fundamentals and technicals in psychology. Right? So you have 50 plus educational webinars on trading psychology, risk management, fundamentals, technicals, economic events, economic data reports, everything in between. How to do analysis, everything. Anywhere from 30-minute to 2-hour webinars. You know what I mean? So yeah, it's crazy. Show them an example of member notes. Yeah, I'll do that after, because we got CPI coming up now. But yeah. And the beautiful thing is, it's not a guessing game when you come into the private channel. There's hundreds and hundreds of webinars on the YouTube page to learn from yourself first. You know what I mean? But anyways, we're going to keep it on gold here. We have 5 more minutes for CPI. I'm expecting either a potential pullback to 1812 bounce, just an impulsive move to the upside, and the buys above 1822. Oh yeah, the crypto newsroom as well. Forgot about that. There's a lot of stuff I forgot to mention, but whatever. Yeah, so we're just waiting for that. It will be amazing. It will be amazing if you add background music on the stream. Usually for these streams, I'm talking for the whole 2 hours. Like I'm talking about fundamentals, technicals, trade ideas. We just didn't go on 1 minute price action yet because we're waiting for the news. You know what I mean? We're still looking for GJ buys once we get 1 minute breaks above 157.500 if we do for scalps. We're still looking for the potential gold buys coming into play shortly with the news potential setup. GU, I'm still expecting the buys above 365. Euro USD, really only look for the buys if we break above this consolidation zone with dollar softness above 1.37. UCAD, we already had some sells from last night at 258. I'm expecting us to drop lower to the 1.25 level. And I'm expecting stock market, after doing that dip, to continue more bullish as well and either give us a pullback to 36,100 or breaks above 36,500. All right. We'll watch it on the 1 minute because it's more exciting with the movement. No, I'm not trading this week. I had a great previous month. I had some solid trades last week. Gold was pretty messy this week as well. I caught one sell prior last week. That was really nice. But I'm just sitting out this week. I was more focusing on capital hungry and content, social media content and so forth. Also been trying to still get workouts at home in because Ontario's been locked down. So just been focusing more on my nutrition, rest and stuff. Had a great month over the last 30-40 days that was shared to you guys. I just want to get some more clear-cut sentiment. Like once gold clears above the 1830s, if it does, it'll be much cleaner buys for me to jump in. Yeah, I don't scalp as much as often. I still scalp if I'm doing a session with the private channel or if some very clean scalps are available. But I more look to take entries still based on the same concepts, still based on the same confirms, but I'm more looking for intraday style trades. Like usually I'll have like a 15 to 20 pip stop loss, looking for like 50 to 70 pip gain. You know what I mean? Try to stick to a 1 to 3 risk versus reward. Exactly. Gold's been in that same messy consolidation zone for months now. And if we can have high inflation, we can have that dollar weakness and technically hold above 1830s, then we can finally get some nice, very easy, clean movement to take advantage of, right? And me, I don't need hundreds of pips. When I catch a trade that's 100 pips or more, that's just bonus. That's gravy. Some of these trades on the intraday plays, 50 to 70 pips, that gold and GJ can feed in a period of hours is very, very favorable. GBP is BXY, USD is DXY, JPY is JXY. For individual. Okay, so inflation is still pretty high. We have yearly inflation still high, above forecast. We had a liquidity grab so far. If we get 1 minute closures above this 1 minute high here, I'm going to be looking for CPI buys here above 1821. Right now, the news just came out. Quick little liquidity grab. Inflation is still high across the board. US dollar should turn weak. If we have 1 minute closures above here at 1820.5, I'm going to look for buys. So right now, just letting it do its whipsaw, letting it do its nonsense. Inflation is exactly how we expected, of still being high. Right now, we're just doing a whipsaw. Remember, gold can easily come down to even give us better buys at 1812 and still be perfectly normal. Okay? So let's just wait for either the clean holds above 1820 on the lower time frame or the retest of 1812. But so far, compared to other CPI and inflation reports, this is a very lackluster, a very mediocre, a very low impact in terms of price action. Majority of the time at CPI reports, you'll see like an instant 100 pip price grab, price flip bullish, or just continue right back up 50 to 100 pips. All we did is spike up and down like 15 pips right now. So same analysis still stands. I'm still in a gold bullish bias, but this CPI looks like majority of it was priced in. It was pretty much on tone of expectations. Very shit impact. What I mean by shit impact is like it doesn't seem like we're getting high volatility to play to our advantage. You know what I mean? But that's neither here or there. I'm still expecting that with this little liquidity grab, if we start to hold above 1820, we can get some pretty nice 20, 30 pip scalps. GJ buys above 157.5 are currently active and 10 pips in play as we had this quick liquidity grab and starting to hold above 0.500. If you didn't get the breakout trade, you're going to need to see a potential pullback, then continuation, but not too much impact so far. You can see the same thing here. US dollar is little changed after the inflation data. It still moved down a little bit, but very minimal change, very minimal impact from CPI today. We're still looking for these 1820 buys. We're still looking for the same GJ trade. We're still looking for GU buys above 365 here. We're still looking for Euro USD buys if we can break above the consolidation zone here at 3.8. UCAD is still chugging away its sells. US 30 still going bullish. So, in terms of analysis wise, the fundamental data came out exactly as we expected, and it's having the exact impact we expected. The high inflation is still having the stock market push higher. Gold is still sitting bullish. Dollar still going bearish. The only shitty thing is the impact was very low. You know what I mean? Majority of the time, CPI reports at least give a 50 pip squeeze on the low end. Today was very minimal impact from the CPI report. But same trade ideas still stand. If you're trading gold into the new 4-hour candle and into London close hours with NYSE volume, 1812 would still be a buy zone. Coming above 1820 with clean cut price action confirms on the lower time frame, breakout or break and retest, still a buy zone. We're still looking to play the same fundamental sentiment of continuing this Jerome Powell and what he said yesterday. We're still looking to play the dollar weakness, Japanese yen weakness, and volatility index weakness. So that means those potential gold buys. Still looking to play GJ buys above 0.500 here. Even if GJ does a deeper pullback to 0.200 or holds above 0.5 now, or if you're already in the breakout entries, still looking for those same buys. GU, we're still looking for the buys at 365, even a little bit of a deeper pullback, double bottom, hold. Still in the buyer bias, playing the dollar strength on GU and the same analysis given. Euro USD, you need breaks above 385. UCAD is the sells are already in play. US 30, the buys are already in play. Okay? This information, US interest rate futures imply at least 3 Fed rate hikes for 2022 after the inflation data was still high, but this is already something that's well known and has been priced in. We can mainly see that the CPI data had minimal impact. I don't know if you guys have noticed, this week the New York sessions have been pretty garbage in terms of scalping or day trades. A lot of the action has been happening over the Euro session. Right? Like even this upside move on gold here, it only came late New York because we had Jerome Powell testifying. The primary New York session was doing this and just ranging, you know what I mean? So I don't know if you guys noticed that yourself as well. Yeah. Yeah, GJ's up 20 pips so far with our breakout buy analysis of 157.5. Anybody take the GJ buys we called out? 157.5 breakout, 1 minute candle closures above, trending bullish price action, Japanese yen weak, 20 pip squeeze. Gold starting to come off here and go as well. Not really the best entry confirms, but just the straight bullish push here. If you had the 1820 buy entry area, let's see if we can get a bullish candle close and a 1 minute retest for the continuation moves. GU as well. If you guys took the GU buys with the 1 minute bullish close, 20 pips on GU, 20 pips on GJ. Euro USD starting to set up as well for the buys above 385, playing that dollar weakness bias explained at the start of the webinar. Dollar index dropping to exactly where we expected, predetermined. Do you guys not see the beauty of bringing the fundamentals and technicals together? Regardless if you're scalping, regardless if you're day trading, regardless if you're swinging, bringing that information together of sentiment movement and individual movement on the currencies, understanding how the overall markets are moving on equities, understanding the fundamentals at play, understanding the impact of economic events and so forth, right? Gold is giving the retest. We just need cleaner price action confirms to hold above 1820. This wasn't really a good candle to enter on. And we're just whipsawing here on gold. It's not as clean as US dollar pair movement here. Right? So, pre-planned analysis. So that was pre-planned analysis we had planned on GU, where either we were going to look to see if we get buys at a pullback here, or just the break above 365, previous highs and key level. You can always rewind the stream to see the confirms we are looking for and so forth. Pre-planned analysis for the scalp squeeze on GJ, which was very short-lived for the 20 pips, but volume and volatility is slower and has been slower over the last periods of New York sessions. But hey, as a scalper, if you get 20 pips in a few minutes, you take that and run as a scalper, right? Okay, so that played out for 20 pips. GU played out for 20 pips and is still active because dollar's very weak right now. Pre-planned analysis, Euro USD buys above 385 here. Anybody take Euro USD from either 365, you got 35 pips, or safer 1 minute closures above 385 key level, same ideology. UCAD, that's just continuing on. US 30 continuing bullish. We didn't get good entries. Okay, gold. Anybody get the gold entry here? 1820s. It just did a minor little pullback like we were talking about here. You know what I mean? Then having the breakout with the 1820 close. Even if you entered after the bullish candle, still a great squeeze here. 30, 40 pips. Pre-planned analysis, 1820 buys. $40 pips, I would secure some partial positions. Let your runners go risk-free to 1828. But, okay, now, besides getting the trades, do you understand the fundamentals and technicals of why we were looking for these buy ideas? Do you understand the reasoning of why we were looking for these various trade ideas? The market structure, the price action, the economic events, the fundamentals, and so forth. All right? Secure your positions, man. Don't be greedy. Getting 40 pips in 2 minutes, don't be a greedy bastard. Control your emotions. Okay? If you are a scalper, if your style of trading is scalping, which is taking quick jabs at the market, playing the session volume, playing the lower time frame price action, take your jabs at the market and get out. Who's this guy spamming why dollar is weak? Dollar is weak because you are a fucking retard. That's why dollar's weak. Dollar's weak because your brain is weak. You know what the funny part is? I gave a full economic breakdown on the dollar as well today. That's why I'm a little bit angry. I gave a full breakdown of the dollar. Okay, everybody. So, gold pre-planned analysis, trade ideas, 1820. 1822 buys played out for anywhere on the low end from 20 pips to the high end of 50 pips. Okay? GJ buy scalps, very short-lived, but gave the squeeze as per pre-planned analysis for 21 pips. GU pre-planned analysis, 30 pips. Euro USD, 25 plus pips, 50 pips on the better entry. All right? I hope everybody enjoyed this educational content. I hope everybody enjoyed the economic breakdown, the fundamentals, the technicals. I hope everybody enjoyed me telling you guys that inflation is going to be high, the impact from that report, how we literally used real world fundamentals in economics to our advantage. We noticed inflation was still high. We understood the impact high inflation would have of being bullish on asset classes and being bearish on the dollar. We confirmed the dollar turning bearish. We lined that up with the technicals for price action entry confirms of buys on 1820, buys at 1.365, buys at 1.385, and we got to make some profit here. All right? If you guys enjoy this content, if you want me to do it more often, make sure you send a like and subscribe, turn post notifications on, as it really helps spread awareness and exposure to the stream. If you guys want to learn more, make sure to check out the description for all of your capital hungry resources. Follow the free news channel, follow the free Telegram analysis channel, watch all the webinars on the YouTube. If you guys enjoy content like this, we do webinars like this every single day in the private channel during our New York scalping session. And we also do daily market update webinars, plus the 100 other things offered in the private channel for $3 a day or $110 a month. All right. Thank you for your support. Thank you for coming and watching. I appreciate it. I will see you guys all next time. I am out of here. Don't be greedy. Don't overtrade. Don't over leverage. And I'll see you guys all next time. Okay.